Hey guys, Crypto Sunday, and still going through the Trump tariff bonanza as everyone's sort of getting very worried and sort of seeming to be getting a little happier. We've had the sort of walk back on the tariffs, the 90-day pause on everyone except China, and just yesterday it looks like we got a load of exemptions for semiconductors, computers, phones, and that sort of thing. So, guess someone's been having a word in their ear, possibly Tim Cook. Still, I think, largest company in the world, all sort of trading blows with Nvidia. So all of their supply comes from China and Vietnam and places like that. So they weren't very happy, even with just the reciprocal tariffs being put on hold. But yeah, it's very volatile. I'm up about 1% or to just over £2,000. This is obviously because I was measuring from Sunday morning last week, and the sort of volatility started in the afternoon and later on in the evening. So from Monday, I think it's up about 10%, 27,000. Looking at the CoinShares report, it's sort of relatively quiet, 240 million outflow, but you can sort of see it's a fairly small bar compared to recent weeks. By assets, 207 million out of Bitcoin, 37 million out of Ethereum, and then sort of fairly small numbers, outflow out of Solana, but inflow into XRP again. Sui, 4.7 million in outflows, but that's not too much, I suppose. People shorting Bitcoin again, nothing too surprising on that. And by country, it's sort of mostly small. Australia, Brazil, Canada, positive, Hong Kong positive, but then some reasonably big outflows from Germany and Sweden, Switzerland, sort of a little bit smaller, but nothing too much there. And in the last week, we've seen continued net outflows on Ethereum. Small numbers relatively. We did get a sort of one inflow day from one ETF in the whole week. So you can see people are not all that happy. That was BlackRock, 6 million, but 36 out of Fidelity. So yeah, Ethereum's really struggling. Looking at the Ethereum Bitcoin ratio, people are not happy at all. And looking at Bitcoin, somewhat on the heavier side, gotten a 250 million outflow from BlackRock on Tuesday, and sort of for the week, 100, 326, 127, 149 million outflows, all sort of takes a knock. These could be, of course, basis trades. So when people are selling all of this, they're buying futures, and it doesn't actually make that much price difference. But this obviously sort of makes the headlines that Bitcoin or institutions are sort of giving up on Bitcoin, and not quite sure that's the case. Friday did see a very quiet day. Inflow into ARK and slight outflow out of Bitwise, but BlackRock and Fidelity flat. So, yeah, we'll have to see what we get in the next week. Well, this was quite interesting from OpenAI. It's a couple of weeks ago now, but when everyone was sort of getting very excited about changing their profile pictures to Studio Ghibli sort of versions of themselves. It sounds like sort of pretty much the whole world was doing this, jumping on the trend, making themselves Ghibliified. And this was having quite a knock on OpenAI's servers, I guess. Sam Altman said it's super fun to see people love images, but our GPUs are melting. You sort of think if it can't really handle a load of people sort of changing profile pictures and generating a few pictures, then, how close are we to proper sort of AI? So they're going to make temporarily introduce some rate limits while they work on making it more efficient. And the free tier soon will only get 3 generations per day. So, basically it's going to fast become a paid service, or I suppose you can use text don't know whether that means image generations and text will sort of still be free. Don't know, but yeah, I always sort of saw OpenAI as moving more towards a paid model basically, and people are sort of saying they're moving to Grok, the Twitter X one. But yeah, I always think that has a bit of a lean, maybe a little bit more right wing, and I've seen some sort of terrible answers that people have sort of asked questions and just got some complete false information. So yeah, I'm not really an AI chatbot user just yet. I don't often pay attention to these sort of price targets and just price predictions, but Arthur Hayes sort of coming out saying Bitcoin's gearing for up-only mode, noting sort of the Fed, somebody from the Fed came out and basically confirmed, I suppose this is kind of known, but confirmed that they would be willing to intervene if the bond market got too bad. And they've sort of noted that they have in the past. They've acted very quickly. They kind of think this is sort of a leading question. You know, if it got really bad, obviously they would intervene. And so asking that, they're obviously going to say, yes, we would again. And then that makes the headlines of like they're going to, which that isn't what they said. But yeah, you've certainly seen sort of volatility in the bond market. And I sort of take notice, to be fair to Arthur Hayes, partly because he was sort of late January calling for 70k in a sort of reasonably big correction. And considering Bitcoin was 105 and everyone was sort of super bullish, they sort of called him a bit of a numpty. And yeah, we're saying that's nonsense and sort of moved on. Obviously, we've in March got to 76 and a half from 105, 107,000, and yeah, sort of in the recent weeks in the tariff. Maybe you couldn't say that he predicted the tariff bonanza, but yeah, it got to 74 and a half on that. So I'll call it close enough to his 70,000. Maybe that was just sort of to make the headlines and things, but 76, I would say fair enough. And he's still saying 250,000 by year end. Again, maybe that's a bit sort of just to make the headlines. I mean, he was saying 1 million before this cycle. So yeah, you've got to sort of put out these big numbers to make the headlines, it seems. But yeah, he's very keen on the Fed sort of intervention, looking at the Fed predictor sort of tools, CME tools, I think. You're now getting sort of 21% chance of what is that? Two rate cuts, 33% chance of three, 27% chance of four, and 10% chance of 5 rate cuts by the December this year meeting. So yeah, starting to sort of hot up a little bit on rate cuts. It wasn't so long ago people were talking about no cuts or even a hike, or inflation is going to sort of make things go a bit balmy. So yeah, I can kind of see his point. Whether the Fed sort of easing like this would lead to other people doing it, we don't really know. But yeah, the Fed sort of do sometimes tend to lead. Still keeping an eye on the global liquidity index, and I realised you can just get this in TradingView, which means you get it daily rather than sort of looking at the previous graphs that I was looking at. So it's quite handy. Just sort of comparing it to the Nasdaq rather than Bitcoin, and you sort of, as Raoul Pal said from Real Vision, you can't unsee this chart once you see it. It sort of maps it almost perfectly. And yeah, you can say obviously price follows earnings with stocks, but you could also say earnings follow liquidity in the market, and how much money is out there, how much sort of money goes into these companies' products. You can this is taking at the moment. I think if you look by default, it just takes US money supply, Europe money supply, China money supply. It doesn't actually take what what the central banks have got on their balance sheet. It's sort of taken just money in circulation. but you can sort of tick these, and it just automatically updates, as you tick them, and you can sort of get a bit more of an idea of who's printing and who isn't, if you like. And yeah, you can sort of drill down a little bit closer, and you sort of can see a little bit where things potentially are going. Obviously, the correlation sort of breaks down, quite, so it's not going to go tick for tick. That's sort of understandable, but we have seen a reasonably large divergence to the downside, certainly. If you sort of map the liquidity on the sort of left-hand sides to what the Nasdaq price would be, we're sort of basically up at all-time highs currently. You sort of look on the 6 month, it's ticked up. It's sort of jumped up on Liberation Day, it looks like, pretty much, and then sort of dropped a little bit, and has now gone to pretty much new heights, and sort of 22,215 on the Nasdaq, 225, which I think was the all-time high. So potentially, if correlation obviously holds true, then we've got a reasonable amount of upside. Sort of looking at the previous high, was before the election, admittedly, and it sort of came down quite a bit into sort of the end of Q4, and sort of why Raoul Pal and Real Vision, admittedly, at sort of the end of Q4, were saying we would get a rough patch in Q1 as a result of this liquidity coming down. So we have, and they're now obviously calling for, the fact that this has gone racing back up to all-time highs. If you include everything, this has gone to new all-time highs. So they're saying this works with a lead, and things will follow it with a sort of certain amount of time, 10 to 12 weeks maybe. And of course, we can overlay this same liquidity index over Bitcoin, and you get less of a sort of exact correlation, of course, because Bitcoin was a much smaller asset, and had its own things it was trading on sort of back in the day. Looking at sort of the slightly more recent, looking on the 5-year, it seems to have sort of got somewhat more correlation. Obviously, you had the 2020 printing there, and then sort of 2022 bear market. Liquidity was coming out of the system. Did sort of time pretty well with Bitcoin, and sort of around about the FTX bottom, liquidity increased, and that was pretty much the bottom of the crypto bear market. You could say maybe for different reasons, and this is all coincidence. If you sort of remove the 2020 pump, obviously tightens up a little bit more. So this is without an offset. You can sort of flick on various time offsets. The person here has sort of put on 108 days, saying that so you move the liquidity index forward 108 days, because they're saying it works with a bit of a lag, and then that sort of gives you projected prices and that sort of thing. I'm sort of thinking maybe just to leave the the standard index as it is, and just have it be higher than where the price is currently. Sort of looking at where you get the daily ticks, it has sort of got quite a divergence now. Looking at where are we? Sort of the previous all-time high around September time. That was sort of showing an implied price, if you like, of $96,600 Bitcoin, and it sort of came, right the way down. We didn't quite get to 65,000, but whether we do potentially go near there, I don't know. Obviously, this line moves around as the sort of two scales autocorrect. So when you take out sort of October, November time, this does sort of pretty much correlate tick for tick on that 74,000 bottom. So It's quite interesting, and it's now sort of ticked up in the last few days to a sort of implied price of 110,000 pretty much. So yeah, whether we're sort of going to start going there with this lag, who knows? But I do think it's interesting to sort of keep an eye on this. Obviously, Bitcoin has very little fundamentals to go on, so we sort of look at things like global liquidity, and you can sort of look at various on-chain metrics to see how much people are using the network. But I think that's possibly less important now, the more it sort of moves into a store of value and less of a sort of transaction network, because people aren't, aside from Lightning Network, people are never going to use it to, for small transactions. So yeah, I think of it, if we're thinking of it as a gold alternative, I would say gold moves fairly well on liquidity and sort of risk and fear of sort of downside, I guess, and fear of lots of things really. So yeah, I think it's interesting to keep an eye on this. So what everyone's saying is moving liquidity, and sort of what Secretary Scott Bessent is looking for was sort of lower dollar, lower 10-year yields, and lower oil, and it's sort of getting 2 out of 3 at the moment, which people are seeing as fairly positive. You had the dollar sort of rise up after the election, sort of pretty much up to the inauguration on the 20th. Raised to 110, pretty much peaked out at 110, and has now sort of been rocketing its way down, getting even more steeply after Liberation Day, if you like, and has really come down below 100. So potentially positive for all risk assets. On the 10-year yield, they are not getting what they want. We don't know really sort of whether this is large countries like Japan and China selling their bonds, or if it's people sort of selling in anticipation of them maybe wanting to sell their bonds, or if it's just margin calls and that sort of thing still. But yeah, it's sort of bottomed out after going down for quite a bit, and they were sort of getting what they want, maybe not quite as fast as they were hoping. I think they would rather this was sort of at 3% or so, and they could roll over all their debt, and they'd be a bit happier. But yeah, after sort of April the 4th, it has absolutely rocketed up, and the sort of the move bond volatility index basically is skyrocketing, and that's why everyone's talking about the Fed getting involved. I think the 30-year Treasury is even worse. Sort of, not sure if they give it down here. Yeah, 4.87, 20-year at 4.94. I think was reading sort of these getting to 5 is pretty much a line in the sand, and where the Fed would step in. So yeah, interesting to see that. And oil coming right down. I mean, even for the whole of the last year, basically, it's been coming down. Sort of, you had war tensions sort of hotting up sort of middle of last year, and that has been sort of easing, and then certainly sort of in the last month has absolutely collapsed. You're getting sort of demand fears alongside it looks like OPEC and the Saudis and people sort of increasing production as part of it looks like an agreement with Trump. So not sure why else they would want to increase production if there's decreasing demand and it lowers the price. So I'm sure there must have been some sort of agreement there, but certainly $60 oil on the US oil, Brent sort of obviously down a similar amount. I tend to focus on Brent a little bit more, where people sort of tend to focus on they could just call it crude oil and people call it the oil price, but as far as I'm aware, like 75% of the world trades Brent oil, but yeah, people watch CNBC and that sort of thing. So crude oil, WTI it is, and this is probably more of an American led phenomenon, so maybe American oil is the one to focus on. But this sort of brings inflation down, and and lots of things down. So it's very welcome for the markets. So we potentially have some positive sort of liquidity news off the back of all this: dollar coming down, oil coming down, yields going up, but then potentially some intervention by the Fed, some sort of new acronym coming out. Get the Scrabble tiles out, as I say, and yeah, we had sort of the bank term funding program last year, or in 2023. Maybe we get something like that, but we'll have to see. So looking at the coins for the week, as I say, this is from Sunday morning, so Sunday night it sort of dropped drastically. But we do have Bitcoin up 0.3% since my last video. Solana down up 6.8%. Ethereum down 11.4%. So it really is struggling at the moment. Chainlink is up 1%. Helium, performer for the week. I've sort of mentioned that metrics have been looking up. They're up 31%. I'll have to check and see if there is any other sort of specific news with them. I've not really been keeping up with the Sol tokens. There's a lot happening. A lot happening outside of the Sol tokens, that is. Gito up 1.1%. Sorry, down 1.1%. Metaplex up 5%. Radium up 9%. And Honey, the Hive Mapper token, down 22.5%. So again, might have a quick look for some news there, but it's a volatile time, and I think it's going to be led by Bitcoin and sort of macro stuff going forward. So we'll see. But yeah, leave your thoughts in comments below, how you guys are sort of faring in this volatile time, and like and subscribe. See you soon.